Very good evening and thanks so much for being with us here on India Today. You're watching the Business Today show with me, Chaiti Narula. Let's start off with all the top news first. Sensex jumps 468 points after falling 1,300 points in just 2 days. IT stocks struggle after Accenture report on pullback in client spending. Sugar stocks hit a sweet spot along with auto, metal and FMCG. Macros looking good in India. In an environment where the world underperforms, India will have an advantage, says Market Guru Vetri Subramaniam. Expressed caution over vulnerability of the Indian market. Says Street has not priced in cyclical setbacks. Believes adverse external factors could dent consumer sentiment and impact animal spirits in select sectors. External Affairs Minister S Jaishankar speaks exclusively at the India Today Indo-Japan Conclave. Says business environment in India not the best for Japanese investments. Top Japanese executives respond by saying that India presents significant hurdles. Google CEO Sundar Pichai takes to stage with IT Minister Ashwini Vaishnav at the 8th Google event. Outlines big investments and plans for India. Business Today TV gives you the lowdown. Blockbuster response to Avatar sequel at the Indian box office. Film breaks in 160 crore rupees in just 3 days. Beats all Bollywood films in opening this year. Indian equities reclaimed stance in the green amongst the benchmark. Sensex snapped a 2-day losing streak, jumped to close higher by 468 points. That's on your screens at the moment. The Nifty reclaimed 18,400 points, finishing the session higher by 150 basis points. Amongst the winners, the auto sector was the clear outperformer, followed by firm gains coming in FMCG and metals pack. Amongst the gainers, we had Adani stock, enterprises and ports, followed by auto majors, M&M, Eicher Motors. All gains upwards of 2%. Let's see the losers at the moment. TCS, ONGC, Tata Motors, Infosys, Sun Pharma, IT Bellwether TCS closed with cuts of 1%, followed by very mild losses from names like ONGC, Tata Motors, Infosys and Sun Pharma. Staying with markets and centering our focus on some important opinion coming in from Market Guru Vetri Subramaniam, Chief Investment Officer at UTI AMC. India Today's global business editor Udayan Mukherjee caught up with him earlier today to understand the mood of the markets in the new year and the road ahead. Listen in.
Vetri, get to see you again. And it seems like in the last few days, something has changed again in the global market scene. People were seemingly very relaxed about how the Fed will ease off now and markets can sort of flesh out much better starting 2023. But all that has changed since the Fed meeting. Are you more apprehensive than you would have been even a week ago?
Good to see you there. I think if I just telescope into the issue you're raising, I think perhaps the market misinterpreted some of the things that came out earlier in November and was looking at some of those data points, including the inflation prints, to sort of start thinking about, okay, maybe we've got to hike in the first quarter, but soon after that they will have to start cutting again. But I think what really came out rather forcefully, and I would say this was more so in the press conference by the Federal Reserve Chairman, Jay Powell, is the fact that they effectively continued to reiterate that this might very well be a plateau where rates might remain high for a while, because their target remains eventually bringing inflation down to 2%. And even though they do think there are some favorable tailwinds perhaps coming in on the good side in terms of supply chains in slightly better shape, they are still concerned about what's happening on the services side of the economy, and effectively telegraphing to the markets that they would not be too perturbed by job losses, because that would perhaps be a natural outcome of the kind of inflation target that they want at 2%. So I think the markets are having to readjust that you can't really look for a Fed pivot because there is no pivot. It's looking more like a plateau. And I think that's where the markets are once again starting to get nervous as to what this will mean, both for financial risk, because the longer these rates stay elevated, Udayan, we are going to worry about who in the financial system will not be able to roll over their debt simply because the cost of borrowing is too high. And the second issue is, will there be a recession and how deep might it potentially go in case this is really a plateau where rates might stay higher for longer. So I think those are the two issues that the market has had to rethink.
What does this mean for India, Vetri? Because last year the world was pretty bad. World markets were pretty bad as well, but we outperformed. And that led to some confidence that even if the world is bad in 23, once again, India will outperform. But at the start of the year, many brokerages, global brokerages, are singing a very different tune. This time they're saying the outperformance has already happened. Don't expect it again this year. Do you agree with that, that having outperformed for the last 12 months, it will be more difficult to do an encore this year again?
I'd look at that in 2-3 scenarios, Udayan. Let me paint the first scenario for you. The first scenario actually is sort of contradictory to everything I said. Let's just say the US recession turns out to be shallow, right? Let's just say for a moment that China gets this easy exit out of zero COVID, into this new regime that they've got. Policy in China has already turned accommodative. So let's just for a moment presume that the world surprises us with a much rosier macro outlook in 23 than what we know, that what we are pricing in today. If that be the case, my sense is it's the beaten down markets that will come to the party because they're the ones who've already priced in the worst part of a downturn. So into a cyclical bounce, I won't be surprised if India actually underperforms. And I would argue if you see market performance in November and the first 2 weeks of December, it's got shades of that. As the world started to come to a sense that maybe things will not be so bad, you actually saw the Chinese market, some of the East Asian markets, and even the US market actually do pretty spectacularly well relative to India. So that's one scenario in which these beaten down markets could do better. I actually think that if the news gets worse in terms of the severity of the downturn, that is where I think India remains slightly better positioned. Whether the degree of outperformance will be as acute as it was certainly in the first 10 months or 9 months of 2022, hard to say it can be as dramatic as that because the valuation gap has opened up quite a bit. But I would say on balance, I would still pick India to outperform in that scenario where the downturn in 23 happens to be far more severe. And the reason for saying that is we will have second order earnings impacts in India, but the overall macro situation in India still is much superior to what it is in some of the other geographies. And I think, that puts a buffer and that sets us up well, considering the longer term growth prospects in India looking far superior to the rest of the world. So I'd say in an environment where the world actually does as bad or worse than what we are thinking today, I think India will have an advantage, but relative performance might not be as strong. I think the other sort of scenario where you would worry about can India actually underperform other parts of the world is that so far we are approaching everything with the context of everything is fine in India and there are problems in other parts of the world. If for any reason whatsoever, and we don't know what it could be, right? We never know what these things are before the event. I think over there, India becomes a bit vulnerable simply because you're already priced rather expensive for structural growth. And any cyclical setbacks we see during 23, including policy making, how to handle a high debt to GDP, the need to consolidate the fiscal deficit, going into an election in 2024, all of those could actually create a situation where India disappoints. But for India to disappoint, I think it will have to be a very India-specific disappointment that will have to come to the forefront, but that is not in the price.
You spoke about second-order earnings impacts in India. Are we beginning to see some of that already filter in? Because from, say, the kind of messaging we heard from the IT companies a week ago, from HCL Tech particularly, that's led to a setback for IT stocks immediately. Do you see more of that filtering in next year?
I think there will be some impact of that, Udayan. And it's not just IT, right? I mean, if you feel that IT will have a slowdown, job growth over there stalls, worse, actually you start to see layoffs. We've heard some signs of that in the US. What if it transmits to our shores? Well, the typical IT professional is a reasonably well-played individual compared to, our average per capita income. They tend to keep our consumption growth rates up. They're buying property, they're buying cars. All of that will start to experience second-order impacts if the IT engine slows down. And I think equally, There are many sectors in India which have significant export linkages, either because they sell overseas or they are selling products where the price is being set globally, right? So if you've got steel prices which have currently caused steel profitability to, witness a significant setback, how aggressive are companies going to be about their investment plans? And that will have second order impacts in terms of the expectations we have in terms of the capex cycle. So that's my concern, that as you see these external variables turn adverse, some of that will show up on our shores, and it will either tame consumer sentiment or it will have a negative impact on the animal spirits of entrepreneurs.
Equities or bank fixed deposits? This is a question every investor faces and has. With the interest rates only now on the rise after a period of extremely low returns that we saw on the fixed deposits and profits in the stock exchanges being the stuff of the legends, the answer should have been very simple. But as Zerodha's Nitin Kamath says, the answer really is not simple. Here is why.
He is an icon for young stock market investors. He regularly disses the so-called new age companies. He's publicly said that Indian stock markets are overvalued. Nitin Kamath runs India's fastest growing zero commission brokerage, Zerodha. And now his comments have shocked equity investors. In a recent newsletter, Kamath made it clear that equity futures and options, the segment with highest trading volumes, are not for everyone. In his latest newsletter, the country's leading stockbroker said that more than 99% of those who actively trade in equity futures and options generate returns higher than bank fixed deposits or 7% annually over 3 years. In fact, Zerodha has diversified its own portfolio to reflect this belief. The company's portfolio, according to Kamath, currently has exposure of 33% to bank fixed deposits, 32% to stocks, 13% to government securities, 9% to tax-free bonds, and 13% to gold bonds. This, according to Kamath, is to ensure that there is no risk to the business due to treasury operations. Kamath added that the company neither leverages nor trades any leveraged products like F&O because they can lose more money than the capital at stake. For investors lured to the stock markets by social media posts of glistering returns and untold wealth made via equity investments, Nitin Kamath has a big word of caution, saying that generating profits from active trading is as hard, if not harder, than generating profits from running a business. He adds that odds of succeeding when actively trading are very low and requires skill, hard work, and some luck to succeed. Kamath also says he was opposed to margin funding because he did not want retail investors to get lured by greed and over-leverage themselves. Bureau Report, Business Today Television.
External Affairs Minister S Jaishankar today raised a concern that business environment in India was not conducive for Japanese businesses. Speaking at the India Today Indo-Japan Conclave, the minister said that Japanese were making far more serious investments in other Asian countries and China compared to India. Here's a look.
You had many Japanese companies here, but they didn't scale up in the way in which they have done in other geographies. And there's a very instructive comparison if you look at Japanese businesses in China, but forget China for a moment, look at Japanese businesses in ASEAN. If one was to look at Thailand or Indonesia or Singapore, I would argue that Japanese business has actually made far more serious investments there than they have done in India. There were a number of reasons for this. I think partly the enabling environment did not meet Japanese expectations, which essentially meant that the Indian system didn't particularly make an effort to get Japanese business in. There were infrastructure issues. There were, in some respects, cultural issues. to some degree, Japanese businesses came up against domestic Indian business, competing in the same sector. So the combination of all of this actually has made what has been a history of 150 years.
Meanwhile, top executives from Japanese companies operating in India have concurred with External Affairs Minister S Jaishankar's view on Indo-Japanese trade in a conversation with Business Today TV Managing Editor Siddharth Sarabi at the Indo-Japan Conclave. The executives said that Japanese infrastructure projects in India are still facing significant hurdles.
Infrastructure just doesn't mean putting rail tracks and making bridges and making airports. It's also about how do we improve the user experience so that the amount of time that an average individual spends in getting by, for example, from a place A to B, improves. Getting through airport, it's a nightmare in India. Can we automate it? Can we make it faster? Can we make it simpler? Can we make it easier for a common man? And this is where we as a company, as a corporation, needs to really invest our energies around. And I think Japan has a humongous amount of learning to bring back to India.
Very, very important and prestigious projects of high speed, crisscrossing the country, starting from Mumbai to Ahmedabad, which itself is very, very challenging. But I think it's the need of the hour for India to take itself to the next level in terms of the mission and the vision of the country to be a 5 trillion economy. And therefore, railway is going to play a very, very crucial role. And today what I see is, one of my comment is that, India needs to bridge infrastructural gap, in a big way. And that is one of the key driver of economy to 5 trillion US dollar by, very, very soon than later.
From a perspective of where India is on its infrastructure life cycle, on its infrastructure journey, I think we are not even 1/3 of the way there. So how do we navigate the next 10 years? I know in infrastructure we think in terms of 20, 30, 40 years, especially the Japanese infrastructure community will take a very long-term perspective.
Google held its 8th annual Google for India event today in the national capital. CEO Sundar Pichai was in conversation with IT Minister Ashwini Vaishnav. The duo spoke about tech regulations, opportunities in India and much, much more. But before that, let's get you a lowdown of all that Google announced for India at this event. Here's a report by my colleague Rachna Dhanaraji.
Google held its 8th annual Google for India event in Delhi, where a couple of big announcements were made by the company. A lot of emphasis was on AI. In fact, Google announced its plan to decode doctors' handwritten prescription using artificial intelligence. However, the company said they're still fine-tuning this service of reading a prescription just like your pharmacy guy would, but with better accuracy. They even demonstrated an example.
So let me show you how our model works. Let's take this copy of my prescription, open a camera and point at it. Let's see if our model can highlight the medicines correctly. The first one is correctly identified as Alifix alongside all the others. While the initial results have been heartening, much work still remains to be done before the system is ready for the real world.
Apart from this, Google said that it will be using artificial intelligence to check an X-ray for tuberculosis. The company is also building a clinical intelligence engine that can be used to diagnose common diseases. Google also said that it plans to build an artificial intelligence machine learning model in partnership with the Indian Institute of Science. This project will be called Project Vani, and it will collect language samples from 773 districts of India. Project Vani will also ensure that the data that is collected and produced under it will be open sourced. The company also explained how it will be using AI for agriculture. They will be using remote sensing capabilities to give an overview of agriculture in the country. They've also developed a landscape understanding model, which is being piloted in Telangana at this moment. This model can identify fields, natural and man-made water bodies, and will also be able to detect events for the fields, such as when the crop was sown and when it was watered. Google also launched Project Bindi, which will allow to advance research and build an understanding of its AI models, which are women inclusive. This is with an intention to make tech space more inclusive of women from all walks of society. The company also launched an app that can understand people with non-binary speech. It's called Project Relate. Google will also be launching a multi-search feature, which is search using text, pictures, audio, video, and will be available for many Indian languages and not just Hindi and English. Google also announced an integration with DigiLocker for government identity documents. It will be using AI to identify and recognize important documents on Google Files app. Google CEO Sundar Pichai was in conversation with IT Minister Ashwini Vaishnav. They spoke about opportunities in India, the upcoming regulations in tech and more. Here's an excerpt from their conversation.
Every time I come, the sophistication of the India startup ecosystem, it's measurably improving. Part of what we have done with the India Digitization Fund is increasingly focusing on our investments towards startups from India, like Glance. And these companies are getting noticeable scale. And increasingly, as you heard earlier, we have announced a $300 million fund with a focus. 1/4 of the fund will go towards startups led by women or startups which are focused on bridging the gender divide. I think, to me, the opportunity India has, part of, if you look at the US as a market, the reason startups are successful is when they build something, they have an access to a 300 million plus market. And it's easy to build something which scales across the entire country. This hasn't always been true in places like Europe, or because you have to scale across 26 markets, and it's tough for a startup to get that scale. I think that's the opportunity India has.
AI is going to play a very big role in India's tech story going forward. There are multiple number of fields, multiple number of areas in which AI is going to make a significant difference. Agriculture is one such field. The diversity of languages that we have, how do we bridge the gap between people who speak one language and the other, that's going to be second. Then making credit accessible to the people at the bottom of the pyramid. That's going to be a major task ahead in which we will be using AI. And that's going to ride on the success that we have already had in terms of the payment system, the identity system, and a very rapid adoption of technology across different sections of the society and across all geographies.
Well, that's all that we could wrap on the show today. That's it from me, Chaiti Narula, on the Business Today show. Keep watching India Today and don't forget to log on to indiatoday.in or go ahead and download our India Today app. Thanks so much for tuning in. Thanks for your time.